got way over a quorum. This is by far the biggest webinar that we've run, so it clearly gives an indication as to the size of the subject and the complications that some of you are experiencing. So for those who don't know me, my name's Alistair Walton. I'm chairman of the BRBA. If you are a broker or a dealer, then and a member of British Marine, then you are a member of BRBA, and our job is to represent your interests up to British Marine. We've got a committee of about a dozen guys. We meet 4 or 5 times a year. It's one of the most active associations in British Marine, and I'm pleased to say that it's also one of the biggest. So thank you to all of you who've joined. On the call with me, Amy Cox, who's Secretary of BRBA, who let you in, Brian Clark, who is Head of Public Affairs and Member Relations at British Marine, and more importantly than all that, of course, Simon Anslow, partner at PFK Francis Clark, and on his team, Richard, Mike, Jim, who are going to run through a bit of an update for you based on the machinations of the last few years since Brexit over VAT and Customs. We had done quite a lot of work in this over the years and thought that we kind of got it licked, and there was a general understanding of what the rules were. But in a recent committee meeting and my tours around the boat show, it was pretty clear that actually that was far from the case. So hence this webinar. It'll be probably the beginning of a series of these that we do as things keep moving along. And so we're really chuffed that Simon's going to lead this for us. If you don't know Simon and PKF, he's going to share his details with you all at the end of the call. So if you've got particular instances where you need some support, Simon and his team are absolutely first class at this and have helped a number of members through some quite challenging issues in the last couple of years. So please lean on them. There's little that they don't know, and if they don't know, they'll go and find out the answers. So just before I intro Simon, just a reminder on housekeeping, stay on mute, please. If you have got a question at the end of Simon's slides, then you can let us know by using the reactions section at the bottom of your screen. In there, there's a little button that says raise hand. And when Simon's finished, if you want to raise your hand, we'll pick you off in order and let you fire your question at Simon. We have got till 12 o'clock for this, but we have got the option to run over if the questions keep coming. So it's important that we get this information to you rather than necessarily stop because we've run out of time. So there we go. Again, thanks for joining. Simon, the floor is yours.
Thank you very much, Alistair. Good morning to everybody. I think quite a few on this call are probably familiar with our team, but for those of you that are not, my name is Simon Anslow. I'm the partner that heads up the VAT and Customs Marine team at Francis Clark, and we provide the help and support and run the British Marine members line for VAT and Customs matters. And just as a reminder that as members you're entitled to call us, contact us, and as Alistair said, lean on us, seek our guidance and help and assistance, at least up to a certain level. So please avail yourselves of that ability. Give us a shout and we'll give you some details at the end of this call and we'll tell you a little bit more about this. Amy, just as a thing, I don't know if everybody else can hear it, but I'm getting a binging every time anybody joins this call. If not, then that's in my head and I probably need to go and see somebody. So if we're able to stop it, great. If not, fine, we'll live with it.
I don't think we can.
I don't think we can. Never mind.
No.
That's absolutely fine. It's only mildly irritating and distracting, but we'll live with it. So the intention is that I'm going to run through the presentation today, talk through some of the issues that we've got, hopefully aided and abetted by Richard on the team, whose primary focus is on the customs side of it, although I'm getting WhatsApp messages from every 5 seconds saying that he can't get in. So never mind, we've got Mike Campbell, we've got Mike Frost, and we've got Jim Susswain from the team also on the call. So between us, hopefully we can field your questions and we can talk through what we've got. And there is a prize for working out which one of those two handsome gents is Richard and which one is me. I'm not even going to attempt to date it, but that's probably in our prime. I would suggest, if you haven't got one already, get yourself a cup of coffee. You are probably going to need it. The intention of today, it's not to turn you into VAT experts or give you some massive, big technical update, although there will be a degree of technicality involved in some of this by necessity. The idea really is to give you a bit of update of what's happened the past couple of years. We've now been this side of Brexit for coming up for 2 years. There's an awful lot that we've learned. And I was just saying to Alistair before we started this, it seems to go, as each day goes by, we think we know less than we did the day before, because things do change. Everybody's got a slightly different experience. They've got a different understanding, particularly across the EU member states. So what we'll try and do is clarify some of those areas for you, clear up some of those misunderstandings if we can, but also raise your awareness, really, so that when you're out there and you're buying and you're selling the boats, you've got a better understanding of what it is that you're dealing with, and perhaps just, hopefully stopping you getting yourself into difficulties, and also looking at the opportunities that may be out there. And as much as anything, today is about really giving you guys the opportunity to talk to us, chuck those questions at us. I can't guarantee that we'll have all the answers, but we hopefully would steer in the right direction. And those where we're getting some common themes, or we're perhaps finding areas that are still uncertain, then we'll use our best endeavors to find them out. So let's just go back to basics on this. And I think the rest of the team will bear me out on this. The number of times we get a call, I have to say, from somebody amongst you guys, and the first thing they say to us, Simon, selling a boat, how do we deal with the VAT? And we stop them there and say, when you say you're selling a boat, what do you mean by you are selling a boat? Do you mean that you yourselves are selling a boat, i.e. you have bought that boat in and you are selling it? Or are you selling it on behalf of somebody else? And the reason for that is, for VAT purposes, how you then proceed, how you progress is very different. The VAT treatment will be very different. Where you are buying in and selling the boat, that is a supply of goods, and there's a particular set of VAT rules all around place of supply, jurisdiction, how that applies, and what you need to think about. If you are acting as a fully disclosed agent, as an intermediary, in other words, you are buying and selling that boat on behalf of somebody else, then your supply is one of services, and that has a different set of rules and implications and obligations throughout the EU. Although when you are acting as the intermediary, you're also still going to have to think about that first one as well on behalf of your client. But I start with this because whenever you speak to us, just be absolutely clear, understand what it is that you are doing and your role in that scenario. So let's have a quick look at that. And I did say I wasn't going to get technical, and there you go, there's a nice technical slide. And for those of you that got a legal bent, there's even a nice little reference there. Now, this is important, and it's very important. It's become even more so since Brexit. And some of this is kind of the old stating the bleeding obvious, but you do need to know this because it will impact on what you do as a broker or a dealer and how you operate and how you treat the sale of a boat. And the basic principle is pretty much obvious. The place of supply for VAT purposes is wherever that boat is when you make the sale. So where the boat is in the UK, it falls within the scope of UK VAT, the place of supply is in the UK, and the UK VAT rules apply. If that boat is within the EU, falls within the scope of EU VAT rules apply, and you may be required to register for VAT in that European member state. If the sale takes place in international waters, it's outside the scope of boat. But what you also have to remember is that where that sale involves the movement of the boat from one place to another, there's an extra layer that is added. So if you're talking about that sale involves moving the boat from within a territory to outside it or into another territory, then the place of supply itself won't change in terms of the rules, but the VAT treatment may do. Because what you'll be looking at then is, if you remove it from one, it's an export. If you're bringing it into another, it will be an import. We're looking at export, potentially that sale will be zero rated. But where it's being brought into another territory, that could be into the EU or into the UK, then you've got to consider what that impact will be, because you could be looking at potential VAT and where you're looking at a boat that's longer than 12 meters, duty as well. So it's important to understand exactly what it is that you're dealing with. Now, services. Now, this is something that I know brokers have struggled to understand and deal with, and this isn't a criticism. It's one of those weird bits of VAT rule. And again, you've got where you're acting as that intermediary, where you're acting purely as the agent, as a broker, and you're going to be charging your fee or the commission for buying or selling that boat. Then the VAT treatment of that commission, of that charge, of your fee, in the first instance will be driven by the status of your customer. And if your customer, the person that you're making that charge to, it doesn't matter whether it's the buyer or the seller, it's whoever you're instructed by and whoever you're making that charge to. If that is a business customer and they belong in the UK, I'm assuming all of you are UK, then your supply, that place supply is in the UK and will be subject to UK VAT. If your customer is a business and they are established or belong outside of the EU, it's outside of the scope, it's not subject to UK VAT, and in most cases, they will then deal with the VAT at their end. And that is irrespective of where the boat may be. So you can have a boat that's actually sat in the handle, you're selling it on behalf of a UK vendor, but actually you arrange a fee for a French commercial buyer, a French charter company wants to buy it. So actually you're going to charge the French commercial buyer a fee for doing it. So even though the current owner may be in the UK, the boat may be in the UK, you're in the UK, you do not charge UK VAT. The flip side of that, of course, is you could be in the UK, you could be selling a boat on behalf of a UK business that's possibly in the office next door to yours, but the boat is somewhere on the other side of the world. That's completely academic. Because it's business to business and your recipient is in the UK, you would charge UK VAT. This is where it gets weird. Where you are looking at B2C, where your customer is a private customer, then the place of supply, and this is where we go back to this previous slide, we said about where the goods are, so we go back to those things there about the place of supply, where the goods are. When you're looking at a B2C, you look at the underlying place of supply of the boat. So if the boat is in the UK, you will charge UK VAT. If the boat is in the EU, it's outside the scope of UK VAT, but you are then liable to register for and account for EU VAT registration, EU VAT. If the boat is anywhere else in the world, there's no UK VAT, no EU VAT, although you may have to consider what the local position is. And again, going back to that first slide, however, if the sale involves an export of that boat from the territory where it's currently into outside that territory, then it could potentially be a zero-rated supply of that commission. All clear as mud, isn't it? So these are things that you are going to need to consider when you're dealing with your commission and how you treat that commission and whether or not it's subject to VAT and where it's subject to VAT. And again, a little for instance, you are selling a boat on behalf of Mr. and Mrs. Miggins. Mr. and Mrs. Miggins, they live down somewhere in the New Forest, selling a boat. The boat's the other side of the world. It's in the West Indies. The fact that the boat's on the other side of the world is completely academic. or sorry, in this case, is very important. The fact that they're living next door to you and they're in the New Forest is completely academic. You're looking at where the boat is, and because it's on the other side of the world, you do not charge them VAT. So these are all the things you have to consider. But if that boat was lying in France, and again, Mr. and Mrs. Miggins, and they're in the UK, but you're selling that boat in France, and it's going to stay in the EU, then you have a liability to register and account for French VAT on your commission. That's quite a big concept to grasp. And this isn't anything new since Brexit. It's always been there. But since Brexit, as you can imagine, it's been brought sharply into focus, because whilst we were all part of the club or we were part of the EU, perhaps, no one paid too much attention. Now they do. So you do need to take care. You need to look at these. You need to look where a boat is being sold and what your treatment of the commission is. So if we're looking at selling your boat, so you're now selling a boat, and this is either you or if you're acting on behalf of a vendor who is operating in business, then what you're looking at selling that boat is potentially having to be VAT registered within the EU and having, colloquialism, full fat VAT registration in the relevant country where the boat is being sold. As a non-established person, unless you go down a route of looking to set up a subsidiary or an associated business that's actually going to be established in that country, and there are a number of you on the call that have been down that route, and you probably attest the fact that yes, it can be done, but it's not straightforward. But if you're going to do it regularly, it is recommended. But if it's the odd one or two and you don't want to go down that route, then you'll be registering for VAT as a non-established person. There is a degree of complexity to it. You'll almost certainly need a fiscal representative to act on your behalf in that country. And if you're looking to bring goods into the EU from outside of the EU, you will probably need what's known as an indirect representative to act on your behalf as well. Not straightforward. There's a whole lot of complexity. If you are in that position, come and talk to us. When you're looking at your commission, there is now something new. It's called a non-union one-stop shop. And this makes life just that little bit easier. So if you are providing brokerage and intermediary services as an agent throughout the EU, and boats could be in a number of different locations, rather than having to VAT register in every single damn member state, what you can do is use this NUOS. They love their acronyms. You can use this NUOS, which means that you need only register for VAT in one member state, complete one VAT return and submit that. What you will need to do though is you'll still need to charge an account for VAT at the relevant local rate, depending on where the boat is. So if it's in France, it'd be 20%, for example. If it's elsewhere, Italy, other places, it could be 21, 22%. But you only need one VAT registration, one member state, and one VAT return to do it. It is actually a lot more easier than I think was originally envisaged. We've actually done that. I don't know if Rich is now on the call. If he's not, if he is, great, he can jump in. He's had experience. If not, we can pick up later. But it is very useful. But again, it comes back to the commission. You do need to consider this. So now we get to some interesting bits. A lot of you will have been involved in sales from the UK. And as we now know, sales from the UK, when a boat leaves the UK, in the first instance, this will now be an export, which gives us the ability to bid a zero rate that supply. But it's not as straightforward as that. This is VAT. There are different types of export, and you need to be aware of what they are, what you can and what you cannot do, and make sure that you get this right. I think I've said this a number of times before. VAT is a transactional tax. It's a here and now. It's not like other areas of direct tax, indirect tax, direct tax rather, where you can go back after the event when you go to submit your annual tax return or your corporation tax return or annual accounts and say, what should we call it? Should we call it this? Should we call it that? You can't do that with VAT. Once you've done it, it's very, very difficult to go back and undo it. So before you do anything, before you sign anything, before you put anything in place, you need to think about what the impact of those arrangements is going to be. And this is really relevant when you're looking at trying to zero rate your exports. So the first one you come across is something called direct exports. And this is where the supplier, this is where you're acting as the principal, it's you that's selling the boat or the dealer that's selling the boat. You are the person that is responsible for and will arrange and will contract with whoever is going to do it, the removal of the boat from the UK. It's you. You have to do it, not your customer, not an agent on behalf of the customer. It's got to be you. You can arrange for an agent to do it. You can do it yourself. And there's nothing stopping you recharging the customer or bringing that within the agreement, either as an item, a line item, or even just incorporating it within the overall price. But you must be the person in the first instance that is seen to be responsible for and actually undertakes the arrangements for the removal of the boat from the UK. That means you can supply it to whoever. It can be a UK customer, overseas customer, it can be whoever you like, provided you are the one responsible for doing it. Then you can operate as a direct export and you can zero rate it. Now, the boat must leave within 3 months of the date of supply, which is normally taken as the invoice date. It can't be used by the customer within that time. And this is where delivery terms really come into their own. This is when we'll touch on this later on, but you've got to look at the contract. You've got to make sure that all the agreements and the arrangements clearly reflect the fact that it's not going to be a UK delivery. It cannot be ex works. Ex works does not equal direct export, and that becomes very relevant here, because the next level you have is something called indirect exports. Now, this is where the customer is responsible for the removal of the vessel. They will make the arrangement. I mean, you may even make the arrangements on their behalf, potentially, but they will be the person in the first instance seen as making the arrangements. They will be the ones that will contract for it. They will pay for it, and it will be dealt with separately. Now, these ones usually are ex-works. In other words, there you go, it's there, it's in our marina, come and get it, guys, thank you very much and good night. So it's an ex-work supply. However, you can only zero rate an indirect export to a non-UK business customer. You cannot make the supply to a UK customer, business or otherwise, and you cannot zero rate an indirect export to a non-EU private customer. Now, I'm going to stop at that point, because up until Brexit, you could make the supply to a non-UK private individual. And indeed, the current regulations, when it talks about an overseas customer, still details as one of the bullet points. In fact, I think it may be the first bullet point, and it's Regulation 129, does actually describe a non-UK, an overseas customer, as being a non-UK resident, indicating that could be a private customer. However, HMRC updated all of their guidance, notice 703, at the just after we left the EU, and they made it very, very clear that in their view it excluded non-business customers. Now, we think that HMRC are wrong, but do we really want to pick a fight with them? Do you want to put yourself in that position where you're having that argument after your customer has already taken delivery of the boat in the UK? They've sailed away, they're long gone, because responsibility is on you, not them. So as it stands at the moment, if you're looking at supplying a non-UK private customer, look at a direct export rather than an indirect export. The third mechanism we got is a sail away scheme, which has been dismissed by many, but actually can be quite useful. And this is where you can make the supply to a non-UK private customer. In fact, that's the only person you can make the supply to. It has to be a non-UK private customer. And you make the delivery to them in the UK to that customer or an agent acting on their behalf. And it's got some advantages here, because actually there's 6 months. They've got 6 months from the date of the supply before they have to remove the boat from the UK, and they can actually use it in and around the UK during that 6 months. So it is quite advantageous. The one thing to bear in mind here is that the clue is kind of in the title here. It's a bit of a Ronseal job. The boat actually does have to be sailed away. We get a lot of questions about this. Can the customer stick it on the back of a trailer and tow it away? No, they can't. Can they put it on a transport? No, it has to be sailed away. There is a set of forms, and this is a VAT 436. It is a 4-part document, and there is a degree of timing that has to be observed, signatures required, and you still need to evidence the removal from the UK, either with arrival at a third country or using GPS tracker. And there was actually the director of one of our larger, more luxurious powerboat manufacturers, should say, who actually had to get up at 4 o'clock in the morning and go down to a south coast town to go and witness a boat leaving. He wasn't particularly happy about it, but it actually served the purpose. But this is a useful one to be used. So you do, between those three, you've got the options, but you have to be absolutely clear as to which one it is that you're using, and you have to observe the conditions. And also you have to make it very clear, not only within the agreements that you have and the documentation that supports that, but on your final sales invoice, make the reference. And in fact, we just go back, we said there, under there, quote that if it's an indirect, quote that one on your invoice if it's a direct. So is Richard here? I'm going by the silence that he's down in Truro, and obviously it's really bad down there.
Yeah, I've tried to dial in a couple of times, so it's not the best connection, clearly.
No, okay, not to worry, not to worry. I'll take this, and I'm sure either Mike F or Jim will pick me up if I'm wrong on this. But this is, again, I don't want to go into too much granular detail, because I appreciate you concentrate on buying and selling the boats, but you do need to be aware of these things. We've got, for those of you that are old enough, the current system that we have in the UK, the current customs mechanism we have for dealing with and processing imports and exports is something called Chief. I think it's been around for about 25, 30 years. It's been around a long time. That's being replaced by something called CDS, completely new system. And Chief is being phased out. In fact, CDS is already in operation. But Chief, you will no longer be able to use the current Chief mechanism. In fact, you can't use it from the beginning of this month. For imports, that's now gone. And as of the 1st of April next year, you are no longer going to be able to use Chief for exports. You have to use the CDS system. Now, there are some teething problems with this and some points to understand. When you're looking at imports, if you are using an agent, some of you will be aware that pre-Brexit, when you imported anything from outside the EU, you had to pay VAT at the point of entry. There was a deferment mechanism, but it was only for about 6 weeks. Now, since Brexit, if you are VAT registered, you have the ability to deal with the VAT through your VAT return. So effectively, you account for it on your VAT return and you claim it straight back. Fantastic. VAT cash flow is superb. Don't have to do anything with it. But it is wholly reliant on ensuring that you have coded the import entry correctly on the documentation when it enters. And with CDS, it's all become a little bit blurry. So you need to make sure that your agent, if you're using an agent, is aware that you are using PVA and they tick the right box, for want of a better expression. Because if they don't, you can't retrospectively deal with it. You will have to pay the VAT on entry. And you all know we're not talking about a toaster or a fridge here. You know, you're talking about boats. This can be quite expensive and really can hammer your VAT cash flow. So you need, if you're using an agent, check how they're bringing the boat in, because they will be using CDS now, and make damn sure that they're using this PFK code to do it where it's coming in as freight. Other things to bear in mind is that there is a bit of an issue with the with import documentation and agents now, in that if you are using an agent, all the official documentation goes to that agent. Yet as it stands at the moment, there's no obligation for the agent to give you that documentation. And indeed, HMRC has gone as far as telling agents, oh yeah, you need to keep it for 6 months, you can destroy it after that. The problem is, you need that documentation to support your ability to be able to reclaim that VAT. Even though you've dealt with it through return, you still need the supporting documentation. It is a problem that has been pointed out to HMRC, and in their usual brilliant style have gone, oh, right, we better look at that then. So there is a quite strong lobby at the moment to, what's the expression, get it sorted. The other thing you also have to bear in mind now, and HMRC have really cracked down on this past couple of years, and again, it sounds like stating the obvious, but it's not, is that to be able to reclaim that VAT on that importation, no matter which mechanism you've used, whether you've used that PFK mechanism and it's dealt with through the VAT return, or whether you've paid for it outright, you still have to demonstrate that you are the owner of those goods coming in. That may sound a bit daft, but if you've got it in a different company associate, it's dealt with through an agent, or it's dealt with through a distributor, but it's your VAT number that's being used, you will not be able to reclaim that VAT. And HMRC are all over this at the moment. You may have, that little thing called a mini budget a little while ago, and the next one that's coming up in the next couple of weeks. Unless you've been sleepwalking through the past few weeks, you know that HMG is looking for a significant amount of money. HMRC have been tasked with really going out and getting it. The kid gloves are off. So you need to make sure your documentation is there. And the other problem we've also got is that there can be anything up to 4 different types of official documentation that's coming in. You've still got the old C79 type thing, you've got the PFK statements, you've got other. So again, you need to make sure that you are getting the right one that's consistent with the nature of import that you've got. Now, I appreciate that you guys are mainly at the front line, and this is probably going to be your accounting function or your finance directors that deal with this stuff, but they need to know, and you need to make sure that they know. And with exports, at the moment, we have the old goods departure message, which goes out under the current system. HMRC have not really been very clear as to what you're going to get under new CDS. It's all a little bit murky. So really, again, we don't necessarily have all the answers on this, but it's just raising your awareness that this new system is here. It's with us. There are issues with it, particularly with documentation. Be aware, be live to it, and just make sure you're talking to your agents all the time, and particularly in advance of any movement of boats either in or out. So, VAT paid status. Oh, we all love this. And I think it's fair to say that probably over half of the British Marine helpline queries we get are to do with VAT paid status in some shape, form or other. We all know it. It's all been around for a long time. So let's just stop for a moment and remind ourselves what this means, and more importantly, what it means now. So when we talk about VAT paid status, but basic principles on this. If you use anything within a territory, UK or EU, and you want it in free circulation with unencumbered movement, so it's allowed to move around freely, then you've got to be able to demonstrate that the VAT has been paid on that. And not just it's been paid at the right time, on the right place, at the right value. And this isn't just a one-stop shop. This isn't just a one-time event. It's that VAT has been accounted for and dealt with at the last chargeable event. And we're talking about boats. This means the last chargeable event involving that boat, or that it's what's called a qualifying ship. And by qualifying ship, there is a particular definition for that, and that's effectively commercial vessels that would qualify for 0 rating. So we're not going to talk about those today, because that is a completely different issue. So it has to be something that is in free circulation and the VAT is paid, unless there's a particular relief that applied to it. But that's what we mean by VAT paid. And when we talk about chargeable event, that means anytime a new boat is built, sold within the UK or the EU, that's a chargeable event. VAT is potentially due at that time on the sale. If you import a vessel into the UK or the EU, that's a chargeable event. Again, you have to look at the VAT position at that time. Or where a business is disposing of a boat, which maybe they reclaim the VAT on that purchase, or they've been using for business purposes, that is a chargeable event. And also, for those that are familiar, pre-Brexit, the UK was involved in this. We're not now, but certainly it's still there within the EU, where you had movements of boats between VAT registered businesses in different EU countries. It would normally mean that the supply was zero rated, but the purchaser acquired it through a reverse charge, an EU acquisition. So there's no actual VAT that was paid or explicitly shown on an invoice, but it was dealt with through a VAT return. Again, it's a chargeable event. So these are all things you need to be looking at when you're buying and selling boats. These are all chargeable events. You don't just go back to, oh yeah, when the boat was first bought back in 2005, I've got a VAT invoice. Great. Because at that time, yes, it may have been had VAT paid status. But in the interim, it's been in and out of the UK, in and out of the EU. It's gone through 5 different owners. It's been used by a business for chartering. So you have to look at each of those events, and then you have to look at that progression. You have to look at the provenance to get to the here and now. And what is it now as of that last chargeable event? And you have to be so careful on this, because I think as you all become aware, you go back 10, 15 years, and yeah, a lot of people becoming aware of VAT paid status, and it was becoming a big question. Now it is, you know, everybody's aware of it. Everybody's looking at it. Anybody looking to buy a boat now, unless they're completely daft or this is their first time and they're just completely clueless, are getting due diligence undertaking and looking at things. EU authorities are looking at this in more detail. So if we just look at where we were pre-Brexit, a reminder for those of you that might have attended the PSA, the Professional Services Association update earlier on the year, you'll have seen some of this and be aware of it. And I make no apology for repeating this, because it needs repeating. So what we had in free circulation, if you had a boat that was considered to be VAT paid, it was able to move around all 28 member states, unencumbered, no issue, no VAT payable. It was fine. It could go from the UK to anywhere else, back, forwards, not a problem at all. Now, as brokers and dealers, technically, you should still have been looking at EU VAT registration if you were buying and selling boats elsewhere within the EU. But I think it's fair to say not many people were. A lot of UK VAT was being charged on boats that were being sold out of France and the UK, Germany and Italy. But no one ever really bothered too much, because we were all still part of the club. So we wind forward, and we're now looking at post-Brexit. We're now 2 years in. So really, everybody should be familiar with this. Everybody should be dealing with this way, but I'm pretty certain not everybody is. And what's happening now is we're finding in a number of EU member states, they're starting to wake up to this. And they are starting to look, and they're getting much more interested in boats that are being bought and sold within their territory. But this is the key thing for VAT paid status. Whereas you had VAT paid status before that was EU, and that covered the UK as well, you can't have that. You cannot have dual VAT paid status. You can only have VAT paid status in one territory. So it'll either be the UK or the EU. You cannot have dual VAT paid status. But I will come back to that point in a minute. So what you've got to be looking at is, well, okay, you started for 10 was, do you actually have, if you've got boats that were kicking around pre-Brexit, did they have demonstrable, documented pre-Brexit VAT paid status? In other words, anywhere within the 28, the EU 28, did they have VAT paid status? Then you're looking at where they were located as at Brexit, that, you know, infamous 2300 hours UTC 31st of December 2020. And a little point here, or we come on to some horror stories, we'll tell you why. The residency of the ownership and where that boat was flagged or registered is completely academic. It's where the boat was located. So if it had pre-Brexit VPS, EU 28 VPS, and it was in the UK as at Brexit, then it'll have UK VAT pay status. If it was in the EU as at Brexit and it had previous EU 28 VAT pay status, irrespective of where that VAT had been paid, it could have been the UK, could have been Malta, could have been Spain, could have been anywhere. It will then have EU VAT pay status, but it will have lost its UK status. And if it was anywhere else, then it's got no VAT paid status. But as we say, that, you know, that's not to the end of it, but that's your starting point. And that's where you begin. That's when you first start looking at these boats. So we then also look at what happens when you move boats around. Now that they've either got UK or EU VAT paid status, we're now looking at two completely different territories. We've got the UK and we've got the EU. And any movement where the boat leaves one and goes into the other is an export from one and an import into the other. And that means that when it goes into that other territory, VAT and potentially duty will be payable, irrespective of whether it had previously had VAT paid status within the EU 28. If it's coming across from the other territory and it's lost VAT paid status in the territory it's going into, then VAT and potentially duty will be payable again, unless one of these reliefs applies. And the ones we can have a quick look at are returns goods relief and TA. Transfer of residence is there, but it's very specific circumstances, and customs is more about where you're getting something done. But we'll come on to those two in a minute. But that's not necessarily the end of the story with VAT paid status. And I've seen this for years and years and years. I'll look, you know, as I do, idly, wistfully sometimes, in a broker's window, and it will say VAT paid or VAT not paid or tax paid, tax not paid. But that's not all. There is a third status. There is another, and that's his VAT accounted for. And you need to be really, really conscious of this, particularly now post-Brexit. When we've got something that's VAT paid, that's pretty straightforward. VAT has been explicitly charged and paid, and it's normally a private customer that will have this. They've paid the VAT, or they've bought it as a previous VAT paid boat. They've not used it for business. It's theirs. They've got it. It's VAT paid. Thank you very much. Or it may even be a business that's bought it, but they've bought it as a boat that has VAT paid status itself. It's a pre-owned boat. In other words, they've not had VAT charged to them. VAT paid, nice and straightforward, in the jurisdiction where the boat is, notwithstanding what we said about not having dual VPS. But you then have those boats that very clearly do not have VAT paid status. They may be in a particular territory under one of the reliefs. VAT's never been paid on the boat. So when you come to sell a boat, yeah, VAT is either going to be payable by somebody, or you need to be looking at another relief. The one you have to watch out for is VAT accounted for. And this is where you are dealing with a business that is selling the boat. Now, that business may be actually operating as a business. A charter company, for example, outright charter company, they've been using the boat for charter purposes. Or it could be something that is superficially private because the ultimate beneficial owner, it's his boat. But the way that it's been operated is through a company which has effectively chartered it back to him. So the legal ownership is at face value with that business that has been making a business supply. And in those cases, like with the charter one, these businesses selling the boat, the probabilities they will have reclaimed VAT on the original purchase, or it was dealt with under this acquisition tax. But again, they received it as a business and they've accounted it for through a VAT return. Now, what that means is that for the duration of that entity's ownership, it will have VAT paid status. It can travel freely within the EU or the UK if it's in the UK. Absolutely fine, not a problem at all. But what it means is when now you come to sell that boat, it ceases to have VAT paid status. You've got to treat it like a VAT not paid boat, but with knobs on. Because if that entity then sells it within the EU, then potentially that will be chargeable on the sale of that boat, or you have to arrange for it to be removed from the EU and then a relief applied. But from your perspective, this is the one that can catch you out. And we've seen this a number of times the last couple of years. You take something at face value. You see something where you're presented by the seller. Here you are. Here's a VAT invoice that I got when I bought the boat. Fantastic, and it's great. And then it subsequently transpires that actually they've been operating for business purposes and reclaim that VAT. So it's not a VAT paid boat. In fact, we've got a case at the moment that's subject to ongoing litigation on exactly that issue. So you need to be aware of that. There aren't just two VAT paid status types. There are three. And of course, when you're looking at all of this, you've still got to determine, well, if it's got VPS, which territory is it actually valid in? So all of these things you need to be looking at. Now, this is where it gets useful. And we look at one of those reliefs, returned goods relief. And this is the one we talked about, those reliefs that applies, that allows somebody that has a boat to re-enter a territory and claim a relief, provided that they had VAT paid status on that boat in that territory before they left. And this is where it gets very useful for us. Now, I'm just going to take it back a bit, because this has always been the case, and it's been one of those things that people just been completely unaware of. And I go back to our Mr. and Mrs. Biggins. They decided not to sell the boat. They can stay in the New Forest. They got the boat down at the Hamble, and they're going to decide to toddle across to France for the weekend, and they're going to come back again. Pre-Brexit, not an issue at all. That paid status boat. They bought it in the UK, charged UK VAT. Thank you very much. So pre-Brexit, they'll go across to France, back again. Nothing to see here, no issue. Now, when they do that, they are technically exporting the boat from the UK. They're importing it into France, and we'll deal with how they deal with that in a moment. But when they come back to the UK, technically, they are importing, they're re-importing the boat back into the UK. And at face value, they are required to pay VAT and potentially import duty when they come back into the UK. In fact, they'd have to do it every time they came back in. But what they're entitled to is this returns goods relief. They're probably completely unaware of it, but that is the relief that applies. And the conditions that allow you to have this relief are that the boat must have had this VAT pay status in the country that it left from and is going back into before it left. It must come back under the same ownership. Ownership cannot have changed whilst it was away. There must be no material change to the boat itself, or as a consequence of value, other than appreciation or depreciation. And it must return within 3 years of when it last left that territory to which it is now returning. Now, these rules are exactly the same for the EU. They're derived from the Union Customs Code, the VAT Central Directive, and various other bits of legislation, and the UK has got the UK equivalent. So it's exactly the same. This applies going the other way as well. Now, the issue that we've had in the UK, and this is the one that most of you have experienced, and I think as a collective and also as a member organisation, along with the RY and others, we have been most vocal about. Because this is the issue that we have had. Because in theory, what you've got here is something that allows someone who's got a boat that perhaps was in the EU as at Brexit, did have that paid status pre-Brexit, and you'd think then they would be able to return to the UK. Absolutely fine, because they're bringing it to the UK. It was that paid before they left. Absolutely fine. But as some of you know, we've had a lot of issues with that, because what happened in effect when we left the EU, UK updated all the UK legislation, replaced every reference to EU with UK, and it was as if the EU never happened. So when we talk about returned goods, there's two things that hit us here. The first one was at 3 years, because HMRC weren't looking at within 3 years of Brexit, because up until that time we were all in it together. VAT pay status applied to the whole of the EU28, including the UK. No. The EU never existed. So they were looking at 3 years from the last time that boat was in the UK. Now, we did get a bit of a concession to start with. They then sort of said, okay, fair enough. But what will allow you is a kind of moratorium. If you've got a boat that's coming back to the UK from the EU, provided it was had VAT paid status, originally pre-Brexit, and you bring it back before the end of June 2022, we'll waive that 3 years. Okay, it's fine. That's kind of okay. After a considerable amount of lobbying, HMRC relented, and what they now say is that if you bring a boat back from the EU, or in fact from anywhere, back into the UK, they will waive the 3-year rule, provided you meet all of the other conditions. But here's the kicker, and this is something for you guys to understand. First off, it's not entirely clear as to whether that is on application. HMRC have made noises about that, and they've kind of said, well, if you tell us about it, absolutely fine, we'll pretty much waive it through. But also, the bit of legislation they're talking about refers to personal possessions, which include yachts. Doesn't make any reference to where the boat is being brought back for commercial purposes. So having said that, HMRC is still sticking to the 3-year rule if it's for commercial purposes, but we have yet for them to turn us down where we have sought a returning boat where it's returning to the UK after more than 3 years away, provided it's met the other conditions, of course. Where it has been commercial, we've managed to persuade them, but I wouldn't necessarily rely on that. The other issue that you've got, that's the first issue, was the timing. The second issue is the clue again is in the title. It's returns goods relief, not goods relief, it's returns goods relief. And as that little box on the right hand side says, that's fine where you've got UK owners that are bringing boats back to the UK that had VAT paid status pre-Brexit, provided those owners had actually had them in the UK previously. So if you've got an owner that bought a boat in the EU pre-Brexit, paid, I know, Spanish IVA, German VAT, French TVA, or bought it as a pre-owned VAT paid boat in the EU, but they themselves have never had that boat in the UK, then they will not qualify for returns goods relief. And if they were to bring that boat back to the UK, they'll be treated like anybody else and they'll be subject to UK VAT and potentially duty. It's outrageously unfair. There's still lobbying going on with HMG. I'm not sure how successful it's going to be, and to be honest, with everything else that's going on, I just don't think it's getting the attention it probably needs. And with the passing of time, I think the Treasurer will probably consider this to be something that has diminishing importance. But that's returns goods relief. That's what gives you the ability to be able to bring a boat back or move it between territories and benefit from this relief. So what I do, that does give us some opportunities. And again, particularly for you, for you guys, because although I said you can't have dual status, you can only have status in any one place, it can give you, if for all intents and purposes, it can give you an effective dual status because you just switch. Because what you do is if you've got VAT paid status in one territory, but you can demonstrate that you are eligible for returns goods relief in the other territory, i.e. you had VAT paid status or it was in free circulation within that wider territory pre-Brexit, and the ownership hasn't changed, and you as the owner are taking it back into that territory, and you're doing it within 3 years, and there's no material change, then you can return to that territory under returns goods relief. You can then resume the VAT paid status and carry on, which is great. So there are a number of owners out there, well, a number of boats out there, which could potentially be eligible for this, in inverted commas, dual status. And what that means for you is that where you're brokering a sale and you've got a boat where the conditions are conducive, where they're right, it means that you can arrange for the sale to take place either in the UK or for the boat to be moved back to the EU, depending on who the customer is, where they want the boat and how they want it to use it in the future. So there is that ability to do that. So it can be done, but it has to be done right. There are issues though. And the biggest one that we've got is, and going back to Mr. and Mrs. Miggins, that probably 95% plus of all of these movements where people go backwards and forwards, they're done under something that's called declaration by conduct, which is a nice grand sounding title, but and again, I'd say those same 95% plus people are completely unaware that's exactly what they're doing. What you would normally do is, if you are moving goods between territories, you've got a pallet of widgets, you've got a bit of kit or the aforementioned toaster that you're moving from one territory to another, it's normally done as freight or it's transported, and there is formal customs documentation that goes with it. Lots of stamping, lots of box ticking, lots of things that are being scrutinized. It's done that way around. However, for means of transport, which not unsurprisingly boats fall within, because they are designed to move around and move around as unencumbered as possible, you have this ability that whereby if you're eligible for the particular relief that's there, you don't actually have to make any sort of formal declaration. Just your mere presence is it, which is great for Mr. and Mrs. Miggins popping backwards and forwards. Not so great for you as brokers when you then come and try and sell their boat and you're trying to evidence the fact that they've been backwards and forwards and that they're actually eligible for returns goods relief. And in fact, we've got one that's ongoing at the moment where the guy's trying to sell a boat. He bought it actually with German VAT on it a few years ago. He had it in the UK, brought it back into the UK. And what he's now doing now, he wants to take it back into the EU so that he can sell it. Absolutely fine. He ticks all the boxes for RGR, except for the fact that there's no formal documentation to show it's been backwards and forwards. Yes, we've got some secondary documentation, and we'll come on to that in terms of fuel receipts, marina dockets and such like, which all build a picture. But the customer in this case is actually adamant that they want some form of official documentation. So our guy's looking to take it back into the EU. What we're finding is many of the EU countries, they can deal with temporary admission, or they can deal with you paying VAT outright. But if you are a private person bringing a boat back in under RGR, you get a shrug of shoulders and say, well, declaration by conduct, you're fine, you meet all the conditions, thank you, nothing to see here. Actually getting them to formally recognise it is actually quite difficult. The other issue we got is also is the fact that some member states are even refusing to accept British boats even qualify for returns goods relief. They're just riding roughshod over the EU Brexit guidelines. Some of you may have seen there was it was about 8 or 9 questions that were put to the EC Commission, to which we got answers back to. The difficulty is, even though those were issued by the EC, they stuck a little, splinters, in the arse bit, which was, that's all good, but it's still down to each member state's discretion. And we're finding 1 or 2 member states are liberally applying that discretion. And we come on, Holland being one of them. So just because it looks like it ticks all the boxes and it qualifies and they meet all the conditions, there's no guarantee if it's actually presented to a particular EU member state that they'll actually accept it. So these are all things that you still have to bear in mind. It's not necessarily a given. I'm just conscious of time, Amy, but hopefully people are finding this useful. So let's have a quick look at that TA, temporary admission. And this is something which is extremely useful. What this allows somebody to do, somebody who owns a boat, who's moving a boat around, is they're allowed to go into a territory. And as we know, that if you go into a territory, you are importing that boat into that territory. But what this allows them to do is that, provided they meet certain conditions, a bit like RGR, then VAT and duty is not payable. And with temporary admission, this is the primary conditions are that the boat must be owned by someone who is resident or is established outside of the territory you're going into. It must be flagged and registered outside of that territory, must be for private use only, although there are caveats to that, must be for private use only, and it must leave within 18 months of arriving in that territory. Now, what I would say here is there are lots of myths and mistakes around this 18 months. And this also this also goes for some of those member states' customs authorities as well, who still don't seem to understand a lot of the rules and regulations around this. That 18 months is a continuous 18 months. It's not an accumulation. It's not an aggregate. It's not a lifetime, limit. It's continuous. So what that means is you have to leave within 18 months of arrival. Nothing's stopping you going back. You must leave within the 18 months, but you can go back and you go in and out as many times as you like. And this is extremely useful if you've got customers, UK customers, for example, who are wanting to buy boats, ex-UK, and you arrange, as a direct export, of course, because you're going to move it across on their behalf for it to be delivered into the EU. They will be the person importer of record under TA. And if they want to keep it as a Marina Queen in Palma for God knows how long, they can pretty much do that indefinitely, provided they leave within 18 months and then they come back and it restarts the clock. But there are things that you do need to be aware of. Again, most of the time, like Mr. and Mrs. Miggins, and this is what gets them their VAT-free entry into France every time they go across and come back again, is declaration by conduct. There's no requirement to do anything when they're, other than, whatever are the local port or border force requirements. There may be issues that have to do, flying the Q flag, for example, other things. But from a VAT and Customs perspective, there's no formal requirement. It's still declaration by conduct. And what we would suggest is if you've got people that are going backwards and forwards on a casual basis, that's more than sufficient. However, if you've got the aforementioned customer who wants to keep their boat in the EU, Marina Queen or otherwise, then we would suggest that they go to the next level of temporary admission. In the good old days, it used to be called an oral declaration because you just used to report to the local customs official, say, here I am, here's my boat, thank you very much. But what you get now is in most of the EU countries, they will provide you with a document. You prepare what's known as an Article 165 declaration. There's a pretty much a standard pro forma document, which they will complete. They'll get signed, which then is like your golden ticket. You can then use your boat with impunity within the EU for the next 18 months. Absolutely fantastic. The thing is that not all of the countries use that declaration or are familiar with it, and in some places actually just getting one is really difficult. Northern France, for example, trying to get one is nigh on impossible. To trying to get one out of there. Spain ironically is very, very good, and Spain's good for a number of reasons. A, because they do it, they recognize it, they actively encourage it, but also it can all be done electronically. I mean, for example, we use an agent who's based down in Sota Grande, but he can undertake these declarations wherever the boat is coming into Spain. It's fantastic. It's really good. Another important point to understand with temporary admission, you cannot sell a boat whilst it's under TA. If you sell a boat whilst it's under TA, that TA immediately ceases and VAT becomes payable. You have to import the boat. So if you're looking to sell a boat which is currently under TA, you need to be looking at another relief or remove the boat from the EU. Same applies for the UK as well. And you have to be, and again, I can't stress this enough, and I'm sure most of you will have been experiencing this, depending on which EU country is, they seem to apply the rules in a different way and how they operate. I mean, France is an interesting one because whereas in the UK, we talked about exporting a boat and then putting it on TA, in France, they have this nice little arrangement whereby a French distributor who is selling new boats, provided they tick all the boxes and they talk to the right customs people, don't actually need to export the boat. It doesn't need to be removed. They can put it straight onto TA. Yet pretty much everywhere else, you have to remove the boat from that country before it can return under TA. In Italy, they've got a mechanism where new boats can be sold, and they've got a nice little mechanism where it's all formally attested. You go 12 nautical miles offshore, and then the owner can bring it back and bring it under TA. It's recognised as being able to be done there. It is quite expensive because, as you imagine, Italy, they want everybody involved. Normally, a lawyer needs to be apostolated. There's a number of things that have to happen, but it is there. But the interesting thing is that there are a number of countries, and in fact, Italy is one of them, Croatia is another, where they do not recognise this just taking the boat 12 miles offshore, changing hands and bringing it back in again. So you have to be extremely careful where you do this and how you operate it, and look at where you're going to, undertake these transactions. So when you're looking to, act, or when you're looking to act as a broker and acting on behalf of somebody, you need to be looking in advance when you're first taking it on at what that VAT treatment is likely to be and what your approach is, because there isn't a one size fits all. There are different ways of approaching these things. And again, this is teaching to suck eggs, but from a VAT and customs perspective, it's absolutely critical. Go back to basics. What exactly is it that they're selling or they're looking to buy? If they're looking to sell it, where is it now? Or if they're buying, where do they want to use it? Where will it be? Where is it currently located? Or where's the intention? Do they ever want to bring it back to the UK? Do they not care? Do they want to have it, operate it within the EU? And you've got to check, what is that current VAT pay status, and of course, where? And from a customer's perspective, you're going to sell a boat, what are they looking for? Are they looking for something where they want a better sleep at night, have a fully VAT paid boat? Or are they looking for something that is a VAT free acquisition? They're looking to run it possibly under TA or something else. And you also need to check out the finance and check, is there any outstanding finance? I mean, that should almost be a given. But if they're buying a boat, you want to look at how they are looking to fund it, because different finance houses have different protocols and requirements. For example, I think it's fair to say Lombard, for example, when they're lending, they'll only lend if it's a corporate that's going to acquire it. That's fine, but that has all sorts of tax and VAT implications about how you then use that boat. Others say it's got to be VAT paid. Others will only be in certain jurisdictions. Others say they're not allowed to charter it. And all of those will impact on how you look to frame that sale or that purchase. Okay. So nearly there, guys, nearly there. So this is really, again, just a summary of sort of things that you need to consider and what you're looking at. VAT pay status, right at the very start. Do your due diligence. Just don't take it at face value. Really go over it. Be absolutely clear what it is you've got and where that is applicable. And remember, it's not binary. You do have that third one. Place of delivery and a handover is absolutely critical. Make sure that your purchase and sale agreements, any documentation is consistent. It supports that. And in Incoterms, that's what we mean. We've talked about Ex-Works. Ex-Works, Incoterms, really, it's a description of the terms of delivery. They're applicable throughout the world, fairly standard. You see things like freight on board, or delivered duty paid. These all have almost like a sliding scale of responsibility as to things like insurance, risk, title, and ownership. Ignore those at your peril, because they do feed into the VAT treatment and they can potentially compromise it. We worked very closely again with one of the large motorboat manufacturers last year on amending all of their contracts so that they were consistent with that direct export, that they didn't cut across it, because the terms they had just cut right across it. So you need to be looking at that and making sure that you've got all of these, you understand what they are, and they're consistent. Be really careful with part exchanges and pre-owned boats, particularly if you're taking those on now within the EU. As I said before, when we were part of the EU, we kind of got away with it. No one worried too much. Now you do. You need to look at what the pre-existing VAT pay status is, and again, the type of it, which jurisdiction it's in. And also, if you're looking to sell it over there, particularly as a principal on behalf of another business, you may have to VAT register. They may have to VAT register. Also, where you are acting as a principal and you're buying and selling a pre-owned boat, you may have to look at other considerations as well, like the margin scheme. We've only just touched on this. And this is something that's available whereby you need only account for VAT on any positive margin you achieve between the sale and the purchase. But what you need to be thinking about is the documentation you then produce, because the buyer of that, when they come to sell it, they're going to need to have something that say that it's been sold under that margin scheme. You need to be explicit. You do not disclose your margin, and you do not explicitly state the VAT, but you do have to put there is a particular sort of narrative and text that you have to put on the invoice to show that it's being sold under that scheme. All of these are important, because you're not just looking at the here and now, you're looking at the there and then. What's going to happen down the line? Because what you don't want is someone coming back to you in 2 or 3 years' time and suing you because you didn't do the right thing at the right time. Don't leave yourself open. A couple of other things to worry about. Some of you that are perhaps of a certain vintage will remember a number of these, and you'll come across them, and they will purport to have VAT paid status. When you look at things like the French, Italian, and Maltese, I think there's also a Greek and similar leasing schemes. Many of the other EU countries did not like them. They did not approve of them, but they accepted them on the grounds that they were all backed by the relevant domestic customs authorities, and provided they have all been operated and concluded in accordance with the scheme conditions, they are valid. But you do need to make sure you get complete and comprehensive documentation. For instance, on that is the French one. CGI were absolute buggers at not providing the schedules of all the interim payments and detailing the fact that VAT had been charged and accounted for. They do now. Cross-border leasing. Oh my God. Now this was something, I won't go into massive detail, but it exploited a difference in treatment between EU member states that effectively allowed people to obtain a boat pretty much without paying any VAT, except on the very final, very small residual payment. Eventually, UK Customs and their EU cousins got together, and he found a way of combating it, undertook a massive exercise back in 2007-8, which effectively discredited the whole thing. And with a rule change, a police supply rule change in 2010, effectively, that was the end of it. However, there are still boats kicking around that went through this scheme. In fact, we had one as recently as a week ago that's cropped up on the market, and all of a sudden it's like, oh my God, does this have VAT paid status? UK HMRC do not accept these boats have VAT paid status unless there's been a subsequent chargeable event at which time the VAT has been accounted for. So if you have anything that mentions cross-border leasing, I'll chuck a couple of names at you: Moreau, Besseling, Intertrust, Fortis, Declan O'Sullivan, Pelagos, anything with those, have a close look at it, because it may fall within that. There are also there were various deferment schemes, typically run out of the Isle of Man, but in reality, what they were, going back to what we were saying before about you had an ultimate beneficial owner, but it was run through a company or a business that reclaimed a VAT and had some sort of lease mechanism. Again, they're okay, but the probability is that their current VAT paid status will be VAT accounted for. So just bear that in mind. Now, a couple of last ones we got here. We said about coming into the UK, and again, this is rather ironic, because coming into the UK, there's no, we don't have an Article 165 type document. We don't have any formal documentation. But what is required is anybody that's bringing a pleasure craft into the UK under its own hull, or is exiting the UK under its own hull, they do need to complete and submit a C1331 document, in and out. Been around for quite a long time now, and probably not that many people were using it. Since the beginning of this year, it became mandatory and is enforceable. And HMRC, whilst they've had a bit of a light touch at the moment, effectively 3 strikes and you're out. You will get fined, you will get penalised, and potentially you could get the boat seized. So there is a requirement to complete it. It is now in electronic format, although I have to say it's an extremely clunky spreadsheet. It's really, what's the best way of describing it? Crap in terms of some of the content and how you do it. It's a very clunky box that says, is this boat UK VAT paid? it's a wrong question, and the poor unfortunate pleasure craft team who get all of these referred to them where that box is ticked as nil have had a nightmare trying to get this changed. But it's there, you need to do it, and you need to encourage any of your clients that are going backwards and forwards to use it. I'm not going to go into detail on Northern Ireland because it's a real hybrid. UK HMRC struggle with it, the Irish struggle with it, we struggle with it. The best thing to do is, if you've got anything involving Northern Ireland, is speak to us and we'll talk it through and look at the specific circumstances. That's probably about the best that I can say. Amy, how are we doing for time? She's gone off to make a cup of coffee.
She probably has. Simon, I'd like to take some questions if you're almost done.
I would. I'd say we've got some horror stories here, but let's take the questions. Let's take the questions. Go on.
13 minutes. I was
13
here. I couldn't find my mouse. Thanks.
There's no answer to that. Sorry, Alistair. Carry on. Will you take questions? I can't see on my. Actually, is it best if I stop sharing now and then we can go on to whatever it is? Let's stop sharing.
Yeah, perfect.
And I'll somewhere I've got a camera.
So while you're finding that, first of all, just
there we go.
Monstrous thanks, Simon. You've got a really great way of explaining a bloody complicated subject in a clear manner, and I've had a handful of texts and WhatsApps from people as you've been talking, saying how good this is. So for those of you who've not understood it, we are recording this. There'll be a copy live on the BRBA Facebook page once they've cleaned it up. So look out for that. We'll probably stick it in latest news if Brian agrees next week or in 2 weeks' time. So if you've got a question, hit the reactions button down the bottom and press raise your hand. We'll take them one at a time. Just a reminder that on the call as well is Brian Clark from BM. So if there's any questions specifically about what BM are up to on this subject, then he'll be happy to take questions. And we've only got 10 minutes left before a hard stop. So let's keep the questions fairly generic rather than specific case issues, if you could. First up is Ben. Ben, if you want to unmute.
Hello. Can you hear me?
Yeah.
Yep.
Yeah. Okay. Just very quickly, as we've only not got long. So just to clarify, if a 1998 boat was UK VAT paid, went down to France, coming back, that can come back under RGR. Same owner, British owner, coming back. No material change, done.
Yeah, in basic terms, yes. If you've got the same owner, same continuous owner, there's not been a change of ownership. It's demonstrably VAT paid when it was last in the UK, which would have been as part of the EU at that time. It's now coming back. The 3-year rule is waived. It is a question of how long it's been. If it's been outside of the UK for more than 3 years, technically, as an argument, they should go to HMRC and seek a waiver. But to be quite honest, if they complete the C1331 on the way back in and submit that and just tick the VAT paid box, I don't think anybody's
But coming in
going
by road transport, not on its own hull.
Okay, kind of road transport might be an idea, just to contact the pleasure craft team, give them all the details, just to get them to rubber stamp it. Nothing else. That should be
just email Lorna and just let her know.
Yeah, she'll be really pleased. Yeah, email.
She'll love it.
Yeah, she'll love it.
Someone also said to me the other day, which is something that I didn't think was right, but I may be wrong. That if it's a UK VAT paid boat and it was sold in the UK as a second-hand boat, and say, for example, the second owner takes it to France and brings it back, he can do that under RGR. It doesn't have to be the original VAT paying owner.
Absolutely. The rules are the rules for RGR are it's the person that is eligible for relief. Or that eligibility condition is that the person importing the boat, i.e. bringing it into the UK, is the same as took it out. And provided it was in free circulation, which it would have been, absolutely fine. They tick the box. Doesn't matter who originally paid the VAT, it was the status of the vessel when it left.
Fine.
And the ownership.
Okay. And the last thing, doing new TA boats. If we've got a new boat in stock in Spain, we were previously told that you could go 12 miles offshore. It seems the Spanish don't acknowledge the fact that 12 miles offshore is international.
Yeah.
Although the rules state that it just needs to leave, which means international waters.
Yeah, you're absolutely right. It goes back to one of those earlier slides. In theory, all that has to happen is that it has to leave. And perhaps I should, I'll actually just nail that point now. Some countries are happy with that. France, for example, is reasonably happy. Italy isn't. What they talk about is making landfall at a third country. Now, if this is Spain, if it's in southern Spain, Gibraltar is really, really useful. But you do have to be careful with Gibraltar. Sailing it to Gibraltar, doing a handover in Gibraltar, and then bringing it back in under TA, well established, it works. We've been involved in that a lot of times. What you have to be careful of is if you remove the boat from somewhere within the EU and it goes as freight or it's transported to Gibraltar. And we've had this with azimuts, for example, going from Italy, where they've gone into Portugal, been unloaded, handover's done, then they've gone into Spain, because the Gibraltars now have got really, really wary of this. Under its own hull, absolutely fine. So in the circumstance you've got, if you take it 12 miles offshore, bring it back into Spain, I would say that's at risk. If you take it to Gibraltar, get an attestation from a local lawyer that oversees the handover, do your PDA, all done in Gibraltar, and then the new owner brings it back in, pre-approved. It's a well-established route, and if anybody needs any contacts or needs to how to do the route, we know, and we use people regularly who would do that. But yeah, Ben, in the first instance, that 12 miles offshore, it's always going to be open to question.
Right.
Cool.
Okay.
Thanks, Ben.
That's amazing.
Chris Manners, Thames Boat Sales in Penton Hook, you had a question on that you put on the Facebook page about TA. Was that question answered for you?
Yes.
Didn't quite hear you there, mate. Okay, I think you've got a sock in your microphone, but I think the answer was yes. James Stone at Inspiration, you're up.
Can you hear me all right?
Yes.
Yeah, hi James, how you doing?
Hi Simon, yeah, good, thanks mate. Just a quick one. You touched on something about boats arriving under their own hull into the UK. Now at the moment, when we're sailing anything bigger back than probably a 50-footer from Germany into the UK, we get a customs agent do an import declaration for us on CDS. You mentioned about needing to do a border force and something else form. Is that true for commercial import, or is that just for if you're a private owner bringing it in?
I really wish Richard was here, because he'd probably actually confirm it. He'd probably nail it down. What you're doing is absolutely right, because you're bringing it back as a commercial importer. You're using the CDS and using an agent to do it. Now, my understanding is that C1331 is primarily a border force document, and that's the one that will record if you've got who's on board, the crew. It's for immigration purposes if you're bringing back a lot of illicit booze. So my understanding is that there is still a requirement, but what I will do, James, and for the benefit of those on here, we will check and confirm that.
Brilliant. All right, lovely. Thanks, Simon.
No problem.
Great stuff. Sam from Ancaster had your hand up and took it back down again. Was that deliberate, or is your question still of interest? I think Sam might have cleared off. In which case, any more questions? Okay. Oh, Ben's waving again. Go on then, Ben.
Got my hand up and I'm waving. In the absence of anyone else asking any questions, so when you say about charging, being liable for EU VAT, Simon, on the sale of a boat, a brokerage boat, say in France, yeah,
Yep.
you say you've got to be registered for EU VAT. Is that EU VAT, or so any member state EU VAT, or the specific country? And then that's why you went onto that nuos thing, or is it got to be the specific country?
Yeah, where you're looking at the sale of the boat, and you're looking at an item of goods, the place, and it's in France. That's where it is. That's where it's going to take place. Then France is where the place of supply is, and then you potentially have a liability to register for TVA in France, and that'll be a French VAT registration. Now, there are exceptions, but it will be down to the particular circumstances and talking to the relevant French authorities. But in the circumstance you've described, you at least in the first instance have a liability. The nuos thing is primarily relating to brokerage services where you are acting as the agent, and that's in respect to. Yeah. So, oh yes, sorry. Yeah. So if you were selling that boat, yeah, there was me. I failed at the first attempt on that very first question. I said, what exactly is it that you are doing? If you are selling it on behalf of somebody else, Mr. and Mrs. Miggins, again, they got their boat in France. You're selling it on their behalf.
Yeah.
Then the two considerations you've got is A, what is the status of the boat for them? Because if they've only got it under TA, then you have to remove it from France. But if it is actually in free circulation and they've got EU VAT paid status, fine, not a problem. Your supply, however, is one of services. Now, your supply is to Mr. and Mrs. Miggins of arranging the sale. They're private customers, B2C, so the place supplies wherever the boat is. The boat is in France, therefore it's within France. Now, you can then register using this nuos. You don't have to actually register in France. You can pick any one of the 27 member states, register in one of those, and then submit the return accounting for French VAT through that return. But that also then, once you've done that, that means that if you then broker a sale in Spain or in Italy and Ireland, you can do it all through that VAT registration. You've only need to do it once and it's done. And that's how it operates. And in fact,
the system is very easy for that one because it doesn't have the language barrier and they're quite straightforward to deal with. And then just as an additional thing, if you've got a non-union OS and a European registration, you have to use the non-union OS if it's eligible as the priority one over the other side.
Okay, so if I'm selling a boat for an English client, it's Spanish tax paid, it was in the EU at the end of Brexit, I've got to charge them, and I'm charging them in sterling because they live down the road. I've got to charge them 21% VAT because it's EVA, and I put that into my nuos account, and then I hand that over to the Spanish authorities. But they'll say, so I'm charging them 21% rather than UK 20.
Yeah, broadly, providing they're a private they're a private seller.
Private seller.
Yeah. Well, what you could do is as Jim has just explained, you could actually then say, right, okay, let's pick Ireland because that's easier to get this nuos through. You would submit your VAT return to Ireland. They collect the VAT and distribute it, but you'd still charge Spanish IVA. So you do that once, you register in Ireland, you charge IVA, you submit your periodic one VAT return, pay over your IVA to the Irish, and then the following month, you've then got a sale that you broker that's taking place in France. Exactly the same thing, only you charge an account for 20% TVA, but through that same VAT return.
It goes into the return line by line, so it splits it out by country when you enter it in. You issue your invoice just as a gross amount to the client. You don't break down the VAT element of it. So you're selling it as a VAT inclusive when you make the sale, and then you take the VAT bit out of it when you submit it on the non-union OS return.
Yeah, Ben, yeah. That is exactly the right reaction. But it sounds like it's a pain in the ass. But actually, what it does do, it then gets rid of the need to have to actually VAT register in every single country where you might be making these sales. Once you've done it, but it sounds awful. It's easy. Jim is your man. Actually, he's now done a few of these, so he's your man. I think we might be out of time now. But if that is something that a lot of you are now going, oh my God, I'll have to deal with that. quite happy for you to submit some questions to Alistair, and we'll perhaps do a little crib sheet.
Yeah, perfect.
It only
Okay.
gets complicated if you deal with a huge amount of different countries. The brokers we deal with tend to sell their boats out of one country. So the brokers I work with all sell out of Greece at the moment. So it's just one line entry for all their transactions that they've done. And that should have been taking place since we left the EU. We should have been accounting for that on those types of services from the date that we left the EU.
Goes back to we don't know what we don't know. Amy and Alistair, I think we're
Yeah.
probably out of time.
We are out of time, but I do have 2 more hands. We'll take those
Sorry?
and then we're done. So John Ford, first of all, and then Dana, if you're still there. So John, please.
Hi, this has been really useful. Thank you. I understand the rules regarding RGR for UK. I've just questioned, do you see that ever being extended to a UK national that applies to all the same rules, that a purchase could take place in the EU and returned out? So rather than the current owner being able to bring a yacht back to UK under RGR, could a transaction potentially take place in the EU?
No, it's not. It just won't fit right. I mean, HMRC have been pretty adamant that it won't apply. I mean, where we've asked for some latitude is where pre-Brexit we've had those transactions and the owner may have changed since it was last in the UK. Because our view is, well, if it was in free circulation within the EU28 pre-Brexit, then to ask for that same owner who's now bringing it back post-Brexit to pay UK VAT again is inequitable. I think the view is that anything that takes place post-Brexit, all bets are off, and you have to abide by the rules as they stand now. And just on that point, going the other way, there are some. We mentioned Holland. We're having real issues with Holland at the moment, even accepting boats that were in the EU as at Brexit that were VAT paid in the EU, coming back to the EU now under UK ownership. Dave, just row roughshod. You have to be really, really careful on that as well. Do you say there was another question, Alistair?
Yes, I've got one more and then we're done. Dana's promised me it's a short one. So Dana, what's your question?
Hi, yeah. Just you mentioned, you can hear me okay?
Yeah, far away.
Okay, yeah. So you just mentioned that in the presentation that it's not possible to have dual VAT paid status. But we are now starting to see in the last year or so some people going and buying some boats abroad and bringing them back and paying the 20% on them. So we've got an EU VAT paid boat. There's still some boats out there that I guess are cheap enough to warrant, or if it's an unusual boat, that they particularly want, they may be bringing it back. It was an EU VAT paid boat. They bought it in the last year or so. They brought it back to the UK. They've paid their 20% on it. So it had EU VAT paid status.
So they've actually physically paid VAT in 2 places. Nice, simple, straight answer is it still holds true. You can't have dual VAT paid status because when you leave, you lose the VAT paid status. What they will have though is the eligibility for RGR when going back. Yeah. So that's it. So technically, they don't have dual status. Right. What they do have is a bloody robust case of RGR when they go back again, and this is why it's absolutely critical. And I would suggest anybody that's leaving one territory to go into the other, when they leave, get it documented. Make sure you get it. If you do everything procedurally correct, when you return, it just makes life a lot easier to be able to demonstrate that you've got RGR. What your people have done there is, and that's fairly typical, is where they've got a boat where it's explicitly VAT paid, say in the EU, but because they're UK residents and they want to use it in the UK, they're not eligible for TA or any other relief in the UK. So if they really want to use it in the UK, and as you say, it's that special, they're willing to pay VAT in the UK so they can use it unencumbered here. It still doesn't mean they've got dual status. Okay. It just means that they've got eligibility for RGR when they return. So yeah, for all practical purposes, they have. But
if they're they're a UK resident and they've bought a boat in Spain, and then they've brought it back to the UK and they've paid 20% on it, and then they decide to put the boat back on the market, and we have an inquiry from the EU, could they get RGR back into the EU because they're not an EU resident?
Yeah.
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 Okay.
Residency and flagging are completely academic,
Fine.
unless you're going to Holland, as we just said. They just
Yeah.
ride roughshod. Everywhere else, and that's it. And you've got to be so careful when you market the boat. Oh, in fact, this is exactly the issue we've had recently when it was marketed as EU and UK VAT paid.
Yeah.
It's not.
Mm.
It will be, if it's in the UK, it's UK VAT paid, EU VAT paid potential.
Yeah.
Okay, because what you've got there is a potential for it to return under current ownership into the EU and resume its VAT paid. I know I'm being picky, I know I'm being pedantic, but you're the ones that will be in the firing line if someone calls you out on it later on.
Yeah.
And that's the key point, isn't it? So I'm the same person has to take it back. So you
And
can't,
it's the
they
same
couldn't sell
person.
it in the UK and then have the other people take it back because they've lost the eligibility for the RGR in the EU if they did that. So
yeah, Jim is absolutely right. It's still to reacquire that VAT-based status, you still have to meet the conditions, which means it still has to be that same person that brought it here has to take it back, and that's where you then conclude the sale.
Yeah.
Does that help? Does that help, Dana? I appreciate it. May be split. It may be split. It may be split in hairs. I'm going to go off camera because actually I've got to take that. So bear with me 2 seconds.
No worries. Thank you.
Great stuff. Amy, you had one thing you wanted to say just at the end.
Yes, thanks, Alistair. I would turn my camera back on, but it's playing silly games. So apologies. I'm going to be blank screen with my name on. I just wanted to thank everyone for their patience for the admittance process. As per my original email that went out, there was limited spaces and the admittance process was a little longer than I hoped for it to be. So some people may have missed the initial cutoff of the first section of the meeting, the introduction, but never fear. The meeting has been recorded and the link to the recording and the slides will be going out either later this afternoon, depending on how quickly it will download, or it will be go out early next week. So if you need to forward that on to anyone within your companies, then please do. And as I said, the slides will be going out as well to accompany the recording presentation. Thank you, everybody.
Thanks, Amy. And yeah, we'll stick those up on the BRBA Facebook page. You're all welcome to join that. Final thanks really to Simon and Jim, particularly, and Richard intermittently. Just monstrous appreciation of your time and effort. Simon, you've got a way of explaining it that makes sense to people who join brokerage to sell boats rather than become VAT experts. So thank you for that. This is the second in the series that we've done as a BRBA. We did a big webinar in COVID. I think we're going to spin this up to be a frequent thing, and I know Brian will nod. So Simon, I suspect we'll see you again in the course of that series. Big thanks to everyone who's joined, and yeah, Simon's details will be in the details that we send out, so that if you've got specific cases that you need his help with, then he'll pick those up. There we go, we're done. Thanks everyone, have a good afternoon.
See you guys.